there's nothing else that you've learned or we've learned this year is that the market doesn't seem to care about any of the news and that price pays more than anything. And it's been the retail investors who have done well as a result of that, and the institutional investors who have found themselves wrong over and over. And here's a classic example. In fact, I'd like to talk about China more, but just looking at Alibaba, right, it was a great beat, right? Sales up 14%, free cash flow up, improved margins all around. And from a chart standpoint, it's actually right now sitting at a point where if it can hold around this $98 a share and go up just a little bit more, maybe get through 100, 125 could happen extremely fast. As we know, it's a highly volatile stock that gets a lot of open interest when it starts moving. So at this point, I would be more friendly than not.
Well, you say you want to talk about China more. Mish, please do. Go ahead. How are you reading that, and what are you going to do with it?
Well, this is a classic example of everybody coming out in the U.S. that I have read this week negative on China. Disinflation. Well, it turns out that most of the disinflation numbers came from what I've read, pork and transportation. China has the ability to print money, and especially if they are indeed in any type of disinflation for real, they can definitely print more money, something that the U.S. can't do right now. Yeah, they have some problems with the jobless rate, especially in the youth. But for the most part, even with all of the bad news, there's been things like $5 billion worth of NVIDIA chips that China is buying. And what's interesting about that is that NVIDIA designs these high-end chips for AI in the U.S., but they are manufactured in Taiwan. So that definitely gets you scratching your head a little bit on that. And then let's go back to the charts. In terms of the FXI, which is the ETF that I like to look at here in the U.S. to gauge China, it is now outperforming the S&P 500. It's actually sitting right on a very pivotal area, about $29 a share, which is the 6-month calendar range high if we look at resets twice a year, which we just had in July. And if it continues from these levels without any major false slips, even with people feeling that China cannot possibly succeed without the U.S. and the imports and exports number being relatively dismal, it looks like it can defy all those odds and actually rally from here.